This is Monday, February 16th, 2026, and silver just got absolutely destroyed. We are talking about a bloodbath, a complete and total massacre. The price dropped from $98 to $87 in less than 48 hours. $11 gone, vaporized, and if you're sitting there right now watching your portfolio bleed, watching red numbers flash across your screen, I need you to listen very carefully to what I'm about to tell you. Because what just happened is not normal. This is not how real markets behave. This is not supply and demand. This is something else entirely. And by the end of this video, you will understand exactly what they just did to you. Welcome to the Money Chronicles. If you are new here, this is where we expose what is really happening in financial markets while everyone else is distracted by the noise. Subscribe right now because what I am about to show you will not be covered by mainstream financial media. And if you get value from this video, smash that like button. It helps more people see the truth. Now let me show you what actually happened. Because the story they are telling you on CNBC, on Bloomberg, on every financial news outlet is complete garbage. They will tell you silver crashed because of weak demand. They will tell you it is a correction. They will use words like healthy pullback and profit taking. That is a lie, and I can prove it. Here are the facts. Silver dropped to $11 in 48 hours. That is a 12% crash in 2 days, one of the most violent moves we have seen in months. And yet, during those exact same 48 hours, something incredible happened. Physical silver premiums went up, not down, up. The US Mint is still out of stock on silver eagles. The Perth Mint in Australia is still rationing supply. Dealers across Europe are reporting 4 to 6 week delays on delivery. Let me say that again so it sinks in. The price crashed 12%, and you still cannot buy physical silver without waiting weeks or paying massive premiums. Does that make sense to you? Does that sound like a real market? In any functioning market, when price drops, supply increases. Sellers come out of the woodwork. Inventory becomes available. Premiums shrink. That is Economics 101, supply and demand, basic market mechanics. But that is not what is happening here. Here, the price is crashing while physical metal remains scarce. The paper price says $80. The physical market says you're going to wait 6 weeks and pay $15 over spot. One of these is lying to you, and it is not the empty shelves. Now let me show you who did this, because this was not random. This was not natural market movement. This was deliberate. This was calculated. And I have the receipts. Look at the trading volume. On February 14th and 15th, massive sell orders hit the COMEX futures market. We are talking about hundreds of millions of ounces worth of paper silver contracts dumped onto the market in a matter of hours. These were not retail investors selling a few contracts. This was institutional. This was coordinated. Someone or multiple someones dumped enormous positions all at once with one goal: crash the price, create fear, shake out weak hands. And here's the key detail that everyone is missing. Nearly all of this selling happened during U.S. trading hours. Not Asian hours, not European hours, U.S. market hours. When New York is awake, when COMEX is active, when the big banks and hedge funds are trading. The pattern is identical to what we saw 3 weeks ago. New York opens, silver dumps, massive red candles, aggressive selling, price collapses, New York closes, silver stabilizes. Sometimes it even bounces during Asian trading hours. Then New York opens again and the selling resumes. This is not coincidence. This is a pattern. This is manipulation. Now let me tell you what happened behind the scenes while everyone was watching the price crash. China was buying. I have the Shanghai Futures Exchange data from February 14th and 15th. During the exact 48 hours that silver crashed in New York, Chinese vaults saw massive inflows. Physical silver moving into Shanghai warehouses, actual metal, real bars, not paper contracts, not promises, metal. While American institutions were dumping paper, Chinese institutions were accumulating physical. While the West was selling digits on a screen, the East was loading trucks with bars. One side is playing a video game. The other side is taking home the prize. And it is not just China. Dubai reported record physical silver imports last week. India dealers are still defaulting on deliveries because they cannot source enough metal. Japan premiums are at 55% over spot. The Middle East is paying 40% over spot. The paper price says 80 cent amount. The real world price is 120, 130 higher. The disconnect has never been this extreme. This is not a market anymore. This is a charade. Now, let me explain the mechanics of how this works. Because if you do not understand this, you will keep getting played. There are two silver markets, the paper market and the physical market. The paper market is where futures contracts trade on COMEX. This is where banks and hedge funds and institutions move billions of dollars every single day. But here's what you need to understand. They are not trading real silver, they are trading contracts, promises, digital entries in a ledger. Most of these contracts never result in actual delivery. They are just bets, financial instruments with no metal behind them. The paper market is like a casino. Money changes hands. But at the end of the day, nobody's actually taking home any chips. The physical market is where real silver trades, coins, bars, metal you can hold in your hand. This is where actual supply and demand matter. And right now, the physical market is screaming shortage. Mints cannot keep up. Dealers are rationing. Vaults are being drained. Delivery times are stretching to weeks, but the paper market does not care. The paper market creates supply out of nothing. A bank can sell 10 million ounces of paper silver with a few keystrokes. They do not need to own the metal. They do not need to have it in a vault. They just need to post margin. They create contracts out of thin air and flood the market with sell orders. This drives the price down, and retail investors see the price crashing and panic. They sell their physical metal. They sell their mining stocks. They exit positions. And someone else, someone who understands the game, buys everything they are selling at a discount. This is wealth transfer. This is how the game works. Your fear creates their opportunity. Now let me show you the proof that this crash was manufactured. Look at the lease rates. Silver lease rates are what it costs to borrow physical silver. In a normal market, lease rates are low, around 0.5% to 1%. When there's plenty of silver available, borrowing costs are cheap. But right now, lease rates are spiking. Some reports show 12% to 15%. That means physical silver is so scarce that lenders are demanding massive premiums just to temporarily loan it out. When lease rates spike, it means there is not enough physical metal to go around. It means the system is stressed. It means the paper market and the physical market are disconnected. So think about this logically. The paper price crashes 12%. Lease rates spike to 15%. What does that tell you? It tells you the crash is not real. It tells you the paper price does not reflect physical reality. If silver was truly weak, if demand was truly falling, lease rates would be dropping, not spiking. The data does not match the narrative. The numbers do not add up. They are lying to you. Now let me tell you what this means for you. Because understanding the situation is useless if you do not know how to act on it. If you are holding physical silver, do not panic. I repeat, do not panic. Do not let a paper price manipulation scare you into selling real metal. Look at the facts. Mints are out of stock. Dealers are rationing. China is hoarding. Lease rates are exploding. You are holding the one thing the entire world is scrambling to get. The paper price is noise. It is a lie. Your physical metal is worth what someone will actually pay for it in the real world. And right now, that is way more than $87. If you are holding paper silver, ETFs, futures contracts, ask yourself one question. If everyone demanded physical delivery tomorrow, could your counterparty actually deliver? The answer is no. There is not enough metal in the system. You do not own silver, you own a promise. And promises break. If you are looking to buy, understand what you are getting into. Physical premiums are high and climbing. Delivery times are stretching. If you can find metal at reasonable prices, that window is closing fast. The lower the paper price goes, the faster physical inventory disappears. Lower prices create more demand. More demand drains supply. The crash is making the shortage worse, not better. Now let me address the people who will say this is conspiracy theory. They will say the market is functioning normally. They will say manipulation does not exist. To those people, I say look at the data. Paper price down 12%. Physical premiums up. Lease rates spiking. Mints out of stock. China accumulating. India defaulting. That is not theory. That is fact. That is evidence. You can ignore it. You can dismiss it. But you cannot argue with it. Here's what I think happens next. I believe the paper price will remain volatile. It will spike. It will crash. It will be manipulated as long as the paper market exists. But physical silver will become increasingly scarce. Premiums will rise. Availability will decline. At some point, you will not be able to buy physical silver at the paper price. Period. This is already happening in some markets. Japan is paying 55% premiums. Dubai is paying 40% premiums. Eventually, that disconnect becomes so extreme that the paper market loses all credibility. And when that happens, the paper price will have to adjust to physical reality. It will have no choice. Now, there are three types of people watching this video right now. The first type is panicking. They see red numbers and they want to sell. They do not understand what is happening and fear controls them. The second type is confused. They see conflicting signals. Price crashing, but metal scarce. They do not know what to believe. The third type understands. They see this crash for what it is, manufactured, temporary, an opportunity. They are using this moment to accumulate while others panic. Which type are you? Let me leave you with this. Silver crashed 12% in 48 hours. During those same 48 hours, mints stayed out of stock. Premiums went up, lease rates spiked. China accumulated physical. One of these things is real. One of these things is manipulation. The paper price crashed. The physical metal disappeared. And you get to decide which one you believe. I will continue to bring you updates as this unfolds. Subscribe if you have not already. Hit the notification bell, drop a comment, and tell me if you think the paper market can hold much longer. I read every single comment. Remember what I said, the price crashed, but you still cannot buy the product. That is not a market, that is a magic trick. And now you know how the trick works. This is the Money Chronicles, and the real story is never on the surface. I will see you in the next one.